The making of a contrarian mind, Michael Burry before Wall Street. Before Michael Burry became the man who bet against the entire financial system and won, he was something quite different, a quiet, determined medical doctor with a restless intellect and an obsessive curiosity about how things work. His journey from a hospital ward to Wall Street trading floors is one of the most unusual transformations in modern finance. But what makes a man leave the security of medicine, a field built on saving lives, to enter the chaos of investing, a field built on risk? To understand that, we must first look into the mind of Michael Burry, the man who saw patterns where others saw noise. Burry was born in 1971 in San Jose, California, and from a young age, he stood out for two reasons: his analytical mind and his independence of thought. Diagnosed early in life with a glass eye after losing one eye to cancer, Burry grew up somewhat isolated, introspective, and comfortable with solitude. That solitude later became his advantage. It taught him to think independently, without needing validation from the crowd, a skill that would define his investing career. Even in medical school at Vanderbilt University, while his classmates focused entirely on clinical practice, Burry would stay up late reading financial statements and history books. He was fascinated by the psychology of markets, by how greed and fear could make intelligent people irrational. Medicine gave him discipline, but investing gave him freedom. When others followed prescribed methods, Burry experimented with data, ratios, and intrinsic value. He devoured Benjamin Graham's The Intelligent Investor and later Warren Buffett's annual letters, realizing that value investing wasn't just a financial strategy, it was a mindset of skepticism, patience, and rationality. Yet, what's remarkable is how he practiced this mindset while still working as a doctor. During long hospital shifts, he would spend his nights managing his small online blog on Silicon Investor, where he published deep analyses of undervalued stocks. His posts were clear, rigorous, and brutally honest. Over time, he gained a cult following not because he shouted the loudest, but because he thought the deepest. People noticed. Even seasoned investors recognized that Burry had a rare ability to separate emotion from logic, hype from truth. He didn't chase momentum, he searched for mispriced value hidden beneath pessimism. But let's pause for a moment. How many people today can say they think independently, truly? How many can resist the constant noise of the market, the pressure to conform, the fear of missing out? Burry did. That ability to stand alone was the foundation of his success. In 2000, after completing his medical residency, Burry made a radical decision. He walked away from medicine entirely to launch his own hedge fund, Scion Capital. His friends thought he was crazy. His parents were bewildered. How could a man trained to heal bodies choose instead to diagnose markets? But Burry saw something others didn't. The same analytical thinking that helps diagnose diseases can also diagnose financial misjudgments. Both require identifying hidden causes behind surface symptoms. Both demand patience, logic, and emotional restraint. At Scion, Burry's strategy was simple yet profound: buy undervalued assets that others had abandoned, and hold them until the market corrected its mistake. He didn't just read financial statements, he dissected them, much like a surgeon examining a patient's anatomy. Within his first year, his returns were extraordinary, up more than 50%, while the broader market struggled. Investors who had initially doubted him began lining up to invest. His reputation grew not through charm or showmanship, but through results. Still, Burry's independence came at a cost. He wasn't interested in networking or socializing with other fund managers. He distrusted groupthink and preferred solitude to social validation. In his own words, "If I've learned anything from history, it's that people don't learn from history." That cynicism wasn't arrogance, it was insight. Burry recognized that human behavior, not financial theory, drives markets. And human behavior is stubbornly repetitive. As bubbles inflated, he stayed skeptical. As panic spread, he stayed calm. He understood that the market's greatest inefficiencies lie where emotions run hottest. Isn't that the paradox of investing? The times that feel safest are often the most dangerous. The times that feel scariest are often the most profitable. By 2003, Scion Capital was outperforming almost every major hedge fund, but Burry's style didn't change. He continued to run the fund from a small office, avoided unnecessary publicity, and kept his investors updated with detailed, transparent letters. He was an outsider, a data-driven contrarian who believed numbers more than narratives. Yet deep down, Burry's story is more than just about finance. It's about conviction, the willingness to trust your own reasoning even when the world laughs at you. How many of us could take that leap? How many would leave a secure, respected profession to chase a vision only we can see? Burry did, and that leap of faith became the foundation for one of the most legendary predictions in modern financial history. His journey reminds us that greatness rarely comes from comfort. It comes from questioning what everyone else accepts as truth. In this first part of his story, we see the roots of what made Michael Burry a legend: his medical precision, intellectual independence, and relentless pursuit of truth. But in the next part, we'll step deeper into his transformation, how this quiet doctor-turned-investor would soon start to see the cracks forming in the foundation of the global economy, years before the rest of the world even noticed. The birth of Scion Capital and the art of thinking differently. When Michael Burry founded Scion Capital in 2000, he wasn't just starting a hedge fund, he was building a laboratory for independent thinking. With a few $1 million from family and early believers, he set out to prove something few dared to believe: that one disciplined individual, armed with data and conviction, could outperform the smartest minds on Wall Street. But Scion Capital wasn't designed like other funds. There were no glossy offices, no army of analysts, no CNBC appearances. Instead, there was just Burry, sitting behind a computer, combing through thousands of pages of 10K reports and financial statements. His method was methodical, almost surgical. He didn't speculate on trends or rely on macro forecasts. He searched for value buried under the debris of market neglect. He looked for companies trading below their intrinsic worth, often due to temporary problems or irrational pessimism. He once wrote, "My greatest pleasure is finding a stock so cheap that it feels almost unfair to own it." That was his philosophy: buying when others were fearful, and selling when they were greedy. But this approach required something Wall Street often lacked: patience. Most investors chase quarterly results, instant gratification, or momentum. Burry, however, was immune to the noise. His investment letters to clients read more like essays in psychology than finance: calm, rational dissections of why the crowd was wrong and why value would eventually prevail. This focus on fundamentals earned him extraordinary returns in Scion's first years. While the tech bubble burst and markets collapsed in the early 2000s, Burry thrived. He had avoided the euphoria, betting instead on undervalued traditional companies and shorting overhyped tech names. In 2001, Scion gained 55%. In 2002, while the S&P 500 fell by double digits, Scion gained another 16%. He was doing something extraordinary. Generating consistent profits in an environment where most professionals were losing billions. Yet, even amid success, Burry's solitude remained. He distrusted Wall Street's social circles and believed that collaboration often led to conformity. He preferred silence to chatter, logic to charisma. This wasn't arrogance, it was defense. The moment an investor starts worrying about how he looks or what others think, clarity vanishes. And clarity was Burry's weapon. Still, independence has its price. Burry's contrarian bets often made his investors nervous. When the market went against him, even temporarily, he faced pushback. Many couldn't handle the short-term pain that long-term conviction demands. But Burry stood firm. He believed that volatility was not risk, misunderstanding was. He often reminded his investors that the most dangerous thing is not to be wrong, but to be wrong with everyone else. He knew that the crowd would always oscillate between greed and fear, and the only way to profit was to think beyond it. By 2003, Burry began to notice subtle patterns in the housing and credit markets. He spent nights analyzing mortgage-backed securities, subprime loans, and credit default data, documents few others cared to read. What he found disturbed him. Beneath the surface of a booming real estate market, he saw fragility: adjustable-rate mortgages being issued to borrowers who couldn't possibly afford them, lenders lowering standards to feed the bubble, and Wall Street banks repackaging toxic debt into AAA-rated products. To most, it looked like an unstoppable housing boom. To Burry, it looked like a ticking time bomb. But here's the key question: why did he see it when so many others didn't? Because unlike others, he wasn't looking for confirmation, he was searching for contradiction. Most investors seek information that supports their beliefs. Burry actively sought data that challenged his own. That's scientific mindset. But his legacy endured. He had proven that one man, armed with reason and courage, could outthink the entire financial system. And so, we must ask ourselves, what does it take to stand alone in a world built on consensus? Could you, like Burry, hold on to your truth when everyone calls you wrong? The story of Scion Capital is not just about money, it's about conviction, resilience, and the art of thinking independently in a world addicted to conformity. In the next part, we'll explore the psychology behind Michael Burry's decisions, what drives him to go against the herd, how his personal philosophy shapes his approach to risk, and what lessons his journey holds for those who dare to think differently. The psychology of contrarian thinking, inside Michael Burry's mind. Michael Burry's genius cannot be separated from his psychology. His story isn't just about numbers, charts, and forecasts, it's about mindset. To understand how he saw what others missed, we must explore how he thought. What made him so different? Why could he stay calm while the entire market lost its mind? The answer lies in the way Burry viewed the world, detached, analytical, and brutally honest. He was never seduced by trends or popular opinions. Instead, he sought truth even when it was uncomfortable. Burry once said, "The most profitable investment strategies are the ones that go against human nature." This statement reveals everything about his philosophy. Most people crave social validation. We feel safer when others agree with us. But in investing, that instinct can be deadly. Crowds tend to form at the top of bubbles, driven by greed and optimism. They also tend to panic and sell at the bottom, when fear takes control. Burry knew that emotional cycles created opportunities and that the greatest profits often came from moving in the opposite direction of the masses. This contrarian nature wasn't an act, it was who he was. Diagnosed with Asperger's syndrome as a child, Burry processed information differently. He didn't rely on social cues or emotional persuasion. Instead, he focused on facts, logic, and data. What others saw as social limitation became his greatest investing strength. It allowed him to tune out noise, resist peer pressure, and think independently. Where most fund managers were influenced by trends, headlines, and investor expectations, Burry stayed anchored to reality. But this independence came with a price. The very traits that helped him succeed also isolated him. During the years leading up to the 2008 crisis, his contrarian bets left him alone, attacked by clients, ridiculed by peers, and ignored by the media. But because he trusted math more than emotion. He once said, "Good ideas are rare, and when everyone thinks something is good, it probably isn't." In a world driven by social media, hype, and herd behavior, Burry's discipline feels almost alien. Today, investors chase momentum, follow influencers, and react to daily news. Burry reminds us that real success comes from detachment, the ability to step back, think deeply, and make decisions rooted in evidence, not emotion. His story forces us to confront uncomfortable questions. Can we resist the comfort of consensus? Can we stay patient when the crowd mocks us? Can we see opportunity in fear and danger in euphoria? But there's another layer to Burry's psychology, his profound humility before reality. Despite his incredible success, he never claimed to predict the future. He viewed himself as a scientist, not a prophet. His predictions came from observation, not arrogance. In interviews, he often emphasized that he didn't know markets, he only understood probabilities. This humility protected him from overconfidence, the silent killer of investors. Many who succeed once fall into the trap of thinking they're invincible. Burry never did. He stayed grounded in data and skepticism, even after his greatest victory. Interestingly, Burry's mindset also reveals a deep moral dimension. He wasn't driven solely by wealth, he was driven by truth. When he discovered the scale of fraud and recklessness in the subprime market, he wasn't just trying to profit, he was warning the system. He wrote letters to banks and investors, pointing out the coming collapse, not to gloat but to expose the danger. Few listened. But history vindicated him. So, what can we learn from Michael Burry's contrarian psychology? That success in investing and in life often depends on your ability to think differently, to embrace discomfort, and to be guided by facts rather than feelings. Burry's story is not about genius, it's about courage. The courage to hold an unpopular truth until it becomes undeniable. As we approach the next part, we'll explore how Burry's contrarian mindset evolved after 2008, how he applied it to new markets and predictions, and what his philosophy teaches us about surviving and thriving in a world driven by hype, fear, and illusion. Legacy, lessons, and the future, the enduring mind of Michael Burry. Michael Burry's story didn't end with the 2008 financial crisis. In many ways, that was only the beginning. After his legendary bet against the housing market, Burry became a symbol not just of financial foresight, but of intellectual independence. Hollywood immortalized him through The Big Short, portraying him as a brilliant yet misunderstood outsider. But beyond fame, beyond fortune, lies the deeper question: what does Burry's journey teach us about markets, human behavior, and the future of investing? When the dust settled after 2008, Burry walked away from Scion Capital. He had made hundreds of millions for himself and his investors, yet he was exhausted. The years of isolation, ridicule, and resistance had taken their toll. While others celebrated his success, he felt disillusioned. The very institutions that ignored his warnings were bailed out, while ordinary people lost homes and savings. Burry's victory, in his own words, felt hollow. He saw it not as triumph, but as confirmation of a broken system. But true to his nature, Burry didn't disappear. He simply changed focus. He turned his analytical mind toward new fields: water, farmland, and technology, always searching for undervalued assets and misunderstood trends. He once stated that his greatest investment idea ever was water. Yet he didn't mean bottled water or utilities. He meant food production, crops grown in water-rich areas and exported to regions where water was scarce. Again, he looked beyond the obvious, thinking decades ahead rather than months. This shift reveals the essence of Burry's philosophy: investing is not about chasing returns, it's about understanding reality before others do. He studies long-term trends, demographics, natural resources, technological disruptions, to identify where value will emerge once the crowd catches up. That's why even after the housing bubble, he continued to make contrarian calls. Betting on GameStop years before it became a meme stock, warning about inflation when others dismissed it, and criticizing passive investing as the next potential bubble. Burry's views on passive investing are especially striking. He argues that index funds, while efficient, create systemic risk, much like mortgage-backed securities did before 2008. In his eyes, when everyone buys the same index regardless of fundamentals, prices become distorted, and the market loses its ability to reflect true value. This is not healthy price discovery, he warned. It's a bubble. Once again, his insight challenges the mainstream narrative. Whether he's right or wrong, his willingness to question consensus remains his defining strength. What sets Burry apart is not just his intellect, but his integrity. He never builds arguments for attention or applause. His goal is understanding. He shares ideas publicly, often through cryptic tweets or deleted posts, not to manipulate markets, but to spark thought. His tone can be harsh, even alarming, but behind it lies a consistent message: think critically. Don't let comfort replace curiosity. Don't assume that safety lies in the crowd. Because history has shown, time and again, that the crowd is usually wrong at the extremes. Burry's story also forces us to reflect on the emotional cost of being right too early. In finance, timing is everything. Burry's predictions often take years to play out, and during that waiting period, he faces intense scrutiny and ridicule. Imagine being certain that a system will fail, yet having to endure years of disbelief while everyone profits from the illusion. It's a psychological test few can survive. Burry did, not because he enjoyed being contrarian, but because he believed in evidence. His strength lies in endurance, not ego. His journey reveals an uncomfortable truth about markets: they are not driven by intelligence, but by emotion. Fear and greed dominate far more than logic. Investors seek stories that confirm their biases, not facts that challenge them. Burry saw through these illusions because he detached himself from them. He treated investing as a science, identifying variables, testing hypotheses, and accepting uncomfortable conclusions. His method wasn't magic. It was discipline. And that discipline, applied over years, created what many mistake for genius. But what about the future? As of today, Burry continues to sound alarms. He warns about debt, speculative trading, and the illusion of safety in a digital economy. His critics call him doom-obsessed. Yet those who understand his mindset know he isn't predicting apocalypse, he's advocating awareness. Every cycle breeds overconfidence. Every generation believes this time is different. Burry knows it never is. His warnings are not pessimism, but realism. They remind us that financial markets are reflections of human psychology, and that psychology never changes. Perhaps the greatest lesson Burry offers isn't about investing at all. It's about thinking. In a world addicted to instant information, he demonstrates the power of patience. In a culture that rewards conformity, he proves the value of independence. In a system where comfort is mistaken for safety, he shows that true security lies in understanding. His life challenges us to ask, do we truly think for ourselves, or do we just follow those who sound confident? Are we driven by logic, or by emotion disguised as reason? Michael Burry's journey from doctor to investor, from obscurity to legend, from ridicule to vindication, is not merely a financial story, it's a human one. It shows how one person, guided by conviction and intellect, can stand against the tide of collective delusion. It teaches us that truth doesn't need to be popular to be real. And it reminds us that sometimes, the most important skill in life is not knowing what will happen, but knowing how to think when it does. As the credits of his story continue to unfold, one thing remains clear: Michael Burry is more than a symbol of foresight. He's a mirror reflecting our own biases, fears, and assumptions. His legacy challenges us to question everything, especially ourselves. Because in the end, the greatest investment we can ever make is not in stocks, bonds, or real estate, but in our ability to think independently, stay rational under pressure, and pursue truth over comfort. So, as we close this journey, ask yourself, if the next bubble were forming right now, would you recognize it? Would you have the courage to act while everyone else celebrates? Or would you, like so many before, be blinded by the comfort of consensus? Michael Burry has already given us the answer. The question is, will we listen? And that's the story of Michael Burry, the doctor who saw what no one else dared to see, the investor who turned logic into a weapon against madness. His journey isn't just about markets, it's about courage, patience, and the power of independent thought. If this story made you think differently about investing, or about the world around you, remember, knowledge is your best investment. What would you have done if you were in Burry's position? Would you have trusted your analysis, or followed the crowd? Let me know in the comments, I'd love to hear your thoughts. Before you go, don't forget to subscribe to The Hidden Investor for more deep, story-driven insights into the minds of great investors and the lessons that shape financial history. Stay curious. Stay patient. And as always, think differently.